What if I told you one of history's greatest financial scams didn't happen on Wall Street? It wasn't Bitcoin. It wasn't Enron. It wasn't even Silicon Valley. It happened 300 years ago in the candlelit coffee houses of London. The South Sea bubble promised unimaginable wealth and left an entire nation ruined. Even Isaac Newton, the man who discovered gravity, lost a fortune he could never recover. And here's the twist. The forces that fueled that bubble are alive today in modern markets. This is the story of the scam that bankrupted Britain. Britain in the early 1700s and was drowning in debt. Decades of war against France and Spain had drained the treasury completely. The national debt had soared to over 30 million pounds, an astronomical sum for its time. Taxes were high. Ordinary people struggled to make ends meet. Merchants, farmers, and artisans all felt the strain. The government needed a solution, a bold plan, a clever way to manage its debt without collapsing the economy. In 1711, Parliament approved the creation of the South Sea Company. The deal was simple. The company would take over a large portion of government debt, and in return, the company would receive exclusive rights to trade with Spanish South America. Silver, sugar, tobacco, slaves. These commodities promised unimaginable profits if the company could deliver them. But Britain was still at war with Spain, and Spain controlled South American trade tightly. In reality, the monopoly existed only on paper. Yet hope was enough to excite investors. Investors were captivated. The company had the king's backing and Parliament's full support. Ordinary bonds became shares. Boring government debt turned into glittering promises of wealth. The company's directors promised gold and riches beyond imagining, and people believed them. By 1719, shares began rising steadily. By early 1720, they were climbing faster than anyone could track. The city of London was caught in a frenzy. Coffee houses buzzed with gossip. Pamphlets circulated like wildfire. Everyone from shopkeepers to aristocrats wanted a piece of the South Sea Company. Even Isaac Newton, a man who could calculate the motion of planets, was drawn into the mania. Other schemes started appearing overnight. Companies promising fantastical inventions, ventures to mine gold in unknown lands. One famously raised money for a project of great advantage, but nobody to know what it is. Speculation spread like wildfire and prices soared. London was consumed by a frenzy of investment. By mid-1720, shares were trading at over £1,000, a tenfold increase in just a few months. People sold farms, homes, and family heirlooms to buy more shares. The frenzy was unstoppable. Every conversation in London, every news sheet was about South Sea stock. Directors encouraged it. Ministers profited quietly. Even the king's mistress received enormous payouts. The wealth promised seemed limitless, yet the foundation beneath it was hollow. The company had almost no real trade, no silver shipments, no sugar cargoes, just numbers on paper. And like all bubbles, it was fragile. Confidence could shatter with the smallest whisper. By late summer 1720, insiders began quietly selling their shares. Rumors spread through the city. Confidence faltered. Panic took hold. Prices began to wobble for the first time. From over £1,000, share prices fell to 700, then 500. Fortunes that had seemed eternal vanished overnight. Families were ruined in an instant. Even Isaac Newton, who sold early for profit, reinvested at the peak and lost heavily. He later lamented, "I can calculate the motions of heavenly bodies, but not the madness of men." The entire financial system shook. Banks faltered, merchants rioted, and credit froze. Parliament stepped in. Investigations revealed corruption at the highest levels of government. Directors bribed ministers, MPs received secret shares, and even the king's mistress profited. Company directors were arrested, their estates seized, and politicians disgraced in public hearings. For thousands of ordinary investors, the money was gone forever. Dreams shattered instantly. Homes lost, savings vanished, families destitute. The South Sea bubble became a byword for financial mania. It became a cautionary tale, etched permanently into history, warning future generations. And yet, history repeats. The pattern is timeless. Speculation, greed, and inevitable collapse. In 1929, the stock market crashed. In 2000, dot-com companies imploded spectacularly. In 2008, the housing market collapsed. In 2021, Meme stocks and crypto tokens surged and fell. Every time the story is the same. A new frontier, limitless hype, soaring prices, and collapse. Greed blinds reason. Confidence can be manipulated. Even the most brilliant minds are vulnerable. Isaac Newton, a genius who calculated planetary motion, fell victim to human mania. Directors, ministers, and nobles made fortunes. Ordinary citizens lost everything. The bubble's collapse shook the entire economy. Banks failed. Markets froze. Panic spread. London's streets were filled with angry mobs. Property seized. Families begging for help. The government intervened. Parliament held inquiries. Scandals were exposed publicly for all to see. Even those who profited faced public shame. Justice was slow but unavoidable. Yet, ordinary citizens bore the brunt. Lives ruined, savings wiped out, communities devastated. The South Sea bubble became a symbol, a warning etched into the annals of history, a cautionary tale of human greed, speculation, and the consequences of unchecked ambition. And yet, 3 centuries later, we see the same patterns repeating in modern markets. People chase the promise of quick riches, ignoring warning signs, just as they did in 1720. Speculation, hype, and human psychology remain constant. Only the instruments change. Lessons from the South Sea bubble remain relevant. Greed never changes. Power and corruption fuel financial manias. Even kings, ministers, and experts are vulnerable. And if something sounds too good to be true, it probably is. Greed, mania, collapse. These forces repeat endlessly across time. The rhythm is predictable, yet humans continue to fall for the same illusions. History is not just past events. It's a mirror reflecting the dangers of human behavior. Understanding these lessons can protect us, but only if we pay attention. Lesson 1. Greed never changes. Human nature is timeless across centuries and markets. Lesson 2. Power and corruption fuel bubbles. Even kings, ministers, and financial experts are vulnerable. Lesson 3. If it sounds too good to be true, it probably is. The South Sea bubble ended over 3 centuries ago, yet its lessons remain vital today. Greed, speculation, and collapse. The same forces repeat, only the instruments have changed. History warns us, but humans often ignore the signs. The rhythm repeats. Isaac Newton, one of history's greatest minds, fell victim. Brilliance alone cannot protect from mania. Even ministers, nobles, and the wealthy could not resist the allure of limitless wealth. The collapse shook London. Banks failed, merchants went bankrupt. Ordinary citizens were ruined. The government investigated. Scandals were revealed. Justice was slow but inevitable. Yet ordinary citizens bore the brunt. Savings gone, homes lost, communities devastated. The South Sea bubble became a symbol, a cautionary tale for all time. It reminds us that human behavior, not technology, drives financial manias. Speculation, hype, and greed repeat endlessly in every market across centuries. The question isn't if another bubble will happen. It's when and who will fall victim. History is not just a record of events. It is a warning, a guide for the present. Understanding these patterns can protect us, if only we pay attention and act wisely. The South Sea bubble teaches 3 vital lessons, repeated across history. Lesson 1. Greed never changes. Human nature is timeless, across centuries and markets. Lesson 2. Power and corruption fuel bubbles. Even kings and experts are vulnerable. Lesson 3. If something sounds too good to be true, it probably is. These lessons echo in every market. 1929 crash, dot-com bubble, housing crisis, crypto mania. Understanding history can save us from repeating mistakes, but only if we learn from it. The South Sea bubble ended centuries ago, but its rhythm of greed and collapse continues today. Greed, mania, collapse, patterns that repeat endlessly across time and markets. Even the brightest minds and most powerful individuals are not immune to financial hysteria. But by studying history, we can recognize warning signs and act before it's too late. The South Sea bubble is a mirror, reflecting human nature's eternal patterns. Greed blinds reason. Confidence is fragile. Human behavior repeats with minor variations. The rhythm is predictable, yet humans continue to fall for the same illusions. So, what can we learn? 3 clear lessons from the South Sea bubble. Lesson 1. Greed never changes. Human nature is timeless, across centuries and markets. Lesson 2. Power and corruption fuel bubbles. Even kings and experts are vulnerable. Lesson 3. If it sounds too good to be true, it probably is. The South Sea bubble ended centuries ago, yet its rhythm repeats endlessly. If you learned something new today, share this story and subscribe for more hidden financial scandals.